People ask me all the time, Jeremy, I'm buying a new house. How does insurance work? And I'm going to tell you in this short video exactly how homeowner insurance works when it comes to purchasing a new home. If you want to understand homeowners insurance, go out to the module that I have set up to describe to you homeowners insurance coverage. That'll teach you exactly how homeowners insurance works and give you a foundation in insurance policies for your home. But when you're purchasing a new house, there's some important things you want to know as a part of the process of buying the home. First, you obviously want to talk to a mortgage company and be approved or pre-approved for a loan to purchase your home. You want to know how much you can borrow before you even go out looking for homes and making offers on houses. So you go out, you get a pre-approved loan, and you have some sense of exactly how much you can borrow, and then you can go looking for a home. Once you've found the home you love, you make the offer, and hopefully your offer is accepted and everything is wonderful. We're set up for the purchasing process on your new home. But this is when all the serious stuff starts to happen. Your mortgage is going to have to get actually approved. It was only pre-approved before. Now we need to seriously approve it. The mortgage company is going to take care of that. Probably an inspection is a part of your purchase agreement, and so an inspection person will be hired to come in, look at the house, and make sure there aren't any secret things going on. And you need to purchase insurance. That involves finding an insurance agent and asking for them to provide you a quote for insurance, and if you feel comfortable with what they've offered you, then putting that insurance policy into place. Obviously, I'm not the expert on mortgages, nor am I the expert on inspections. So if you want more information about that, you're going to need to go out and find that elsewhere. What I am the expert on is insurance, and I'm going to tell you exactly how insurance works when purchasing a new home right now. So your mortgage company is going to ask you for that insurance quote to start their process off. This is because most homeowners insurance is paid through what's called an escrow account. Escrow accounts are set up by your mortgage company, and they're designed to pay for two things: your homeowner's insurance and your property taxes. You'll pay a little bit of money every month when you pay your mortgage payment into your escrow account. And then at the end of the year, when the bill comes for homeowner's insurance or the bill comes for property taxes, the mortgage company will pay those bills out of your escrow account. So you never actually have to pay your homeowner's insurance bill, nor do you have to pay your property taxes out of pocket. Now, you certainly are paying for those. You're just paying for them when you send your mortgage company your monthly payment every month. So an escrow account is going to be set up as a part of your mortgage. Your mortgage broker wants to figure out what the right amount is to charge you every month so that it's properly set to pay your homeowner's insurance when it comes due every year, and your property taxes, which are usually due twice a year or semi-annually. So they'll want to see a homeowner's insurance quote at the beginning of the process of putting your mortgage together so that they can figure out how much you'll actually be paying per month. You're going to go to an insurance agent and you're going to say, hey, I would love a wonderful insurance quote on a homeowner's policy. I'm planning to buy a home in a month. Can you help me out? Now here's a tip. If you have cars, ask them to quote your home and auto together. You get discounts on your auto a little bit for bundling home and auto, but you get major discounts for bundling on your home for bundling home and auto. In fact, some insurance companies only write insurance if you will put your home and your auto together with them. So they won't provide you a homeowner's policy only, or they won't provide you an auto policy only. And a lot of those companies are the best companies. So you want to have access to them by giving them the opportunity to cover both your home and your auto at the same time. So bundling is one of my pieces of advice as you go into purchasing your homeowner's policy for your new home. Once you have a quote, you can hand that quote over to your mortgage broker. That's all your mortgage broker should need at first. They're creating kind of a ballpark number for what you'll be paying on your mortgage, and a quote will be enough to start. If everything works out, the mortgage comes together, the inspection goes well, it looks like we're coming to the closing date, and the closing date means the day when you actually take ownership of the home, when you are legally become the owner of the home and the other person sells it to you. That is the closing on the house, and that's the date that you're really working towards as a first-time home buyer. So you've got the quote, you've got the mortgage, they're all kind of pulling together. We're getting 3 or 4 weeks out from the closing. Now we need to put our policy into place. And that's really simple. All you need to do is call your insurance agent and say, hey, I've decided that I want to take this policy, I want to put it into place, and I need you to take care of getting all the documents to my mortgage broker. Pretty easy, right? You just let them know. Your insurance agent will probably ask you to sign an application, set up payment structure, have all those things in place, answer any questions that you have. And once you've done those things, your insurance agent will send 2 documents usually to your mortgage broker. The first is called a certificate of insurance. And the certificate of insurance simply says this person has insurance. It's usually an annual policy, a full year policy, starting on the day that you purchased the house. So the date on your certificate of insurance should be the date of your closing, and it would go a year after that. They'll also send your insurance or your mortgage broker an invoice. So hear me out, because that sounds weird. Okay, well, they'll send him an invoice. Your escrow account, which I talked about a second ago, is a part of your mortgage loan, right? You've got your loan, you've got your escrow account, you pay into both of those things every month, and then your escrow account pays out for your insurance coverage and your property taxes. But there's nothing in that escrow account right now. You have not paid into that escrow account, and as nice as your mortgage company may be, they are not going to pay for things that you owe before there's any money in that escrow account. So they're not going to work in the arrears. They're going to build up money over the course of time before they're willing to pay out of the escrow account for your homeowner's insurance and your property taxes. And so at closing, at that day when you purchase the house from the other person, one of the line items, one of the costs that you'll have on your closing documents is your annual homeowner's insurance premium. That is almost always included as a part of the closing. So you'll be paying inside of this process one full annual term of your homeowner's insurance. That's essentially coming out of your pocket as a part of the closing. It may be a part of the loan that you got, but it's really your money that you're either borrowing or paying in, depending on how you set up your closing, being paid for the first annual term of your homeowner's policy. Over the course of the next 12 months, you'll pay your mortgage, and a little bit of that each time will go into your escrow account. And so the next year, when your annual homeowner's premium is due, they'll send a bill to your mortgage company, and your mortgage company will pay that, and that will continue for as long as you have a loan and have insurance. The escrow account will pay for the homeowner's premium every year, and it'll just work forward from there. So that's an escrow account. So that's the basics. We start off with an insurance quote for your new home. That gets sent to the mortgage broker so that the broker can set up what your actual monthly payment on your mortgage will look like. When you're ready to seal the deal, the insurance agent will ask you to sign an application, and then we'll send the documents that are necessary to the mortgage broker. And then when you close on the new home, one of those little line items in the closing will be 1 year's annual premium for your homeowner's policy. After that, you'll pay little bits every month into your escrow account, and then every year your insurance company will send a bill to your mortgage company, who will pay your homeowner's premium, and that will continue for as long as you have your home, have the mortgage, and have insurance. I hope this helped a little bit to give you some peace of mind about how putting together your mortgage, your insurance, and your purchase of a new home all work. I hope you have a great experience with it, and I'm more than happy to help you out either in that Facebook group that you're connected with. You can ask questions there and we'll all help you, or by giving us a call at Shine Insurance. Have a wonderful day.